Welcome to the REI Diamond Interview, your source for real estate investment jewels of wisdom with Dan Breslin.
Welcome to the REI Diamond Interview, your source for real estate investment jewels of wisdom. I'm Dan Breslin, and on these REI Diamond Interviews, I have the pleasure of bringing you the real estate investment community's brightest minds. And today, I'm here with a special guest, Kirby Atwell from Eye Candy Homes. And when Kirby and I met, one of the things that was striking to me was his approach to building a team that was doing the real estate deals as opposed to most of the gunslinger type attitudes, the kind of, every man for himself type of attitude that most investors approach the business with. And I was kind of blown away by the team structure and how many people were on the team. It was kind of amazing for such a short period of time. And it was one of the things that really stuck out. So welcome to the show, Kirby.
Thanks, Dan. Great to be here. I appreciate it.
Nice. So let's talk about what you did before you got into real estate and kind of how you got started. Everybody's interested to know, what path brought you to here.
Yeah, definitely. So as you mentioned, we do have a team now. A company that my partners and I own is Eye Candy Homes. I started it with longtime friends, John and Janelle Swarsinski, back in 2012, and we've grown it over the last 3.5 years. But I personally got started in real estate back in 2006. I went to West Point Military Academy and graduated in 2005. And shortly after graduating, I was stationed down in El Paso, and I always had the entrepreneurial bug, I guess, to where I was always looking to do something entrepreneurial. And so I'd always, I'd read a lot of books, and when I got my hands on Rich Dad Poor Dad in 2006, I knew that real estate investing, just that mindset really appealed to me, and I knew that that's what I wanted to do. So about probably 2 weeks after reading that book and the height of the market, I went out and bought my first deal, which probably wasn't the best timing, but luckily I was very fortunate to be in El Paso, Texas, where the market really didn't fluctuate that much. So I bought one of the first properties I looked at, and it was like a $100,000 rental property, and I bought it with the basically 100% financing that they were offering at the time. And, it was definitely the good old days of real estate investing when financing was flowing freely. And so I started doing that, and I bought a few more there in El Paso, and I really just kind of learned there. And I was very fortunate to be in a market where it didn't fluctuate. Had I been stationed in Southern California at the time, I would have probably been in trouble because the market, very shortly after kind of fell out. But the properties really remained the same value throughout. And then from there, I went to Hawaii, where I was stationed next, and that was right after the downturn. And so I spent some time there really studying the market, looking, every weekend I'd go out and look at properties over, from 2007 to 2009. And finally, I got another property there right on the beach. It was a foreclosure. And so I did a little bit while I was in the Army, where I was stationed. I was working full-time in the Army, but I could do this on the side and accumulate some rental properties. And I always knew that when I got out, I was going to do this full-time. And so from Hawaii, I went to Japan for a few years and obviously didn't do much real estate investing there, but I invested heavily in education and just learning as much as I possibly could and saving some money. And then in 2011, I got out and basically got home on a Wednesday and started looking at properties with my realtor on Thursday. I mean, I knew exactly what I wanted to do and that this is the path I wanted to take, and didn't really miss a beat there. And shortly thereafter, I partnered with my two partners, John and Janelle Swarsinski, and we started Eye Candy Homes at that point. So, and as you mentioned, Eye Candy Homes, it's kind of grown from 2000. Really, we started beginning of 2012, so it's grown for the last 3.5 years. It's primarily a rehabbing company, buy, fix, and sell. We also do real estate education, and we have a realty brokerage as well that we started in the last year with Steve Budzik, the managing broker. And now we've got 22 people on the team, including the brokerage, and everybody has very individual jobs within the company.
All right, you got 22 people running around. I mean, you guys aren't doing one-off deals here and there. I mean, what kind of volume you guys putting together, and kind of what's the specialty right now for Eye Candy Homes?
Yeah, so when we started in 2012, we hadn't done a flip yet. We went to a rehabbing class, and we decided this is what we want to do. And it's funny, I just mentioned this recently to somebody. We wrote down our goals at that class of what type of volume we wanted to do. And at that time we said, if we could do one a month, we'd be really happy with that. And we'd meet our goals. And within 2 years, we were definitely doing one a month. And now we're starting about one rehab a week on average now. So yeah, definitely more volume, but a lot more overhead too when you've got a bigger team. But our focus, what I've kind of noticed over the last few years is that there's two different ways to approach it, and neither of them are wrong. But you can either kind of be a one-person investor or have a small team, and you're going to limit your overhead, but you're going to have a lot more of the profit in your pocket at the end of the day. Or our approach from the beginning, we're younger and we knew this is what we wanted to do long term. So our approach was always, let's reinvest back into the company. Let's try to grow the team and do more volume and try to build it that way. We felt like, we'd have more of a market presence that way, and long term it would benefit us more.
That's great, Kirby. Let's talk about the team approach and the overhead structure a little bit, because I know a lot of guys. I know a ton of guys that are more of the one-man show and, maybe hire an assistant. But how did you go about structuring? Is this 22 people that are receiving a salary? I mean, did you guys kind of like chop up each deal? Is it a pay per result? I'm a big pay per result guy. If you brought value to the table and you're on a team, equal to the value you brought to the table will be your profit share. In the way I structure my deals, but we don't have necessarily everybody working on every deal. So can you talk about, shed a little light on that for us?
Yeah, exactly. That's an excellent point. And we kind of struggle with that in the beginning because it's difficult if you've got somebody who's an admin person, to come up with how do you pay them on production or on a result-based pay. And it's a challenge. But what we've realized is that the difference is absolutely night and day. I mean, it's crazy. When somebody is paid on production and it's very clearly defined, this is what the product that we want you to create, or this is the result that we want you to have, and you're going to be paid directly on that result. It's amazing how people will find a way to get that result. And they'll get it in quantities, as opposed to saying, if you show up for an hour, you get $10 or $12 or whatever it is that you're going to get paid, regardless of whether you produce any type of result or not. And we've had both types of people, but now 100% of the people that work with us on our team full time are paid on production. And as I mentioned, we have a pretty detailed structure, and it's kind of, I think a lot of people have read the E-Myth Revisited by Michael Gerber, and it talks a lot about that, how to have individual people who have individual positions, and there's an organizational structure that's set up, and it's kind of based around that type of thinking. And so there's people in our office who never go out to properties because they have other jobs that they're either doing marketing or admin or finance, and they don't need to. So we don't have 15 people going to every property and working on every individual property. We have a couple of project managers who are out in the field managing the general contractors. And by the way, we hire general contractors on every property, and they bring in the subs. So that's different than a lot of people do it as well. A lot of people will sub it out themselves, but we were interested in doing more volume. And so we realized we're going to give up a little bit of the profit by paying a general contractor, but we're going to be able to do a lot more deals that way. And so we have a couple project managers. We have an acquisitions team of 3 different people. We've got a kind of an admin HR person, a finance person. My partner, John, is the investor relations, so he raises all the money for the deals. Janelle is in charge of the marketing. She oversees the marketing and admin side. So everybody has their position, and they have a defined target and product that we want them to create in that position, and they're paid based on it.
Interesting. I got 2 questions. I'm going to pick the one that's kind of on the first of my brain here. You hire GCs every time. Can you give me, a brief qualification process or how you went about finding, 1 or 2 good GCs? Because let's face it, they're just not all created equal, right?
That is for sure. Any of the gray hairs that I have on my head is definitely a result of working with some of the GCs. There are some great ones, though, as well. I mean, So it's definitely an interview process similar to any other interview process. The absolute best way that we've been able to find general contractors that are qualified is referrals. If a guy sees your bandit sign on the side of the road and he calls you up and says, hey, I'm looking for work, we're going to screen him a lot more heavily than somebody who our trusted friend, tells us this guy just did an incredible job on my project. And, he's somebody who I would recommend you hiring because, the guy that's out of work, typically there's some reason why he's out of work. And not always, but in a lot of cases. But the guy who's doing a great job is typically not out there beating the streets looking for work. He's well employed. And so we'll go to job sites where we see they're organized. You can see when you pull up on a job site, typically, if you've done this a few times, you can tell if the job is going right or if it's not going right just from pulling in the driveway because you can see the organization of it. You can see the difference from the last time you were there. You can see just if the contractor cares. If there's just crap all over the place, that's going to reflect throughout the project. And so we'll look for job sites that look very well organized. They look like there's people there consistently. There's not large gaps in the work and that sort of thing. And we'll pull up and just ask, who's doing this job? Would you like to bid? And we always create the scope of work for each project ourselves. Our project managers do, along with our estimator. So we'll bid it out typically we'll send it out to about 8 different contractors on each job. And by the time you get to the end of the bidding process, typically you have 1 or 2 bids that actually make sense if you bid it out to 8.
Got it. So on every project now, there's a few levels of management here. This is starting to sound like a big corporation in the sense you have a project manager going out, you have an estimator going out, then you hire a GC on top of that. And this all takes place. Is this part of the acquisition team here, or is the other acquisition team separate from the project manager, estimator, and then the GC?
Yeah. So let me go through it and try to clear it up a little bit. So we have 3 people who are on the acquisition side, and our realty brokerage is the office right next door to our investment company. And so our acquisitions team works out of the brokerage. So they're constantly looking for deals. When they line up a deal, we'll put in lots of offers. So we don't go out to deals typically unless we have it under contract. But if, we have one that looks like we're going to get it under contract, we'll actually go out and do the estimate. So our acquisitions team will go out to properties. They're looking at property. They're meeting with sellers. But if we're not going to send our estimator out to a property until we think we're pretty sure that we're going to get it. So once we get it under contract or we're pretty close on it, we'll send our estimator out. He does the whole estimation of the rehab, takes all the pictures, goes through. We have a pretty lengthy checklist that he goes through. And if everything checks out, and he'll also typically have a professional home inspector come out, and if everything checks out in that phase, then he creates the scope of work with the project manager. And then if it's a very high-end home where it's usually it's about 750 or above on the ARV, we're going to bring in a designer as well because we want to have a professional designer working with us on that process. And then also an architect if we need the architect involved. So we have that whole team planning everything out, creating a scope of work that's item by item, SKU number by SKU number, extremely detailed before we bid it out to our contractor. And then we send it. So once we're done with that whole process, that whole planning process, we send the plans, the detailed scope of work. We send all of the information on that property to about 8 different general contractors that we think could handle that size deal because, like you said, not every general contractor is created the same. So if it's one guy and his stepbrother who are doing all the work, we're going to put them on a smaller project. And if it's a larger company, we'll put them on the $300,000-$400,000 renovation. And so we'll send it to all of them, and then we do a walkthrough with them of the property. They give us a bid, and then it's just the project manager who's actually overseeing the whole rehabbing process then.
Got it. So you've taken a lot of the guesswork and a lot of the miscommunication out of the process by providing detailed spec sheets when you send out these jobs for bids, right?
Exactly. Yeah, it's 100% about the system. When we first started, when we were doing one deal, we were working 8-hour days when we thought we were really busy because we really had no system. And the system has evolved over time, and now we're working just as much, but we can handle. We have 24 different projects going on right now, and we can handle those because we have that system and that communication level.
Got it. Something I'm sure our listeners are wondering right now. So you, John, and Janelle started the company. Were either of you three construction background oriented? Did you grow up on a job site or something like that?
No, we really weren't. We educated ourselves. So we really figured out what to look for, but we always knew that we weren't going to be the ones doing the construction. And in some ways, I feel like that helped us. You know, there was definitely times where it hurt us as well, but I think it helped us build the system that we have, because I think the tendency is when you know all of the construction yourself, that you're the best one to do it. And that's with any job. You know, if you know it well, you feel like I'm the best one to do it, so I'm going to jump in there and get it done. And the first time a problem comes up, you think, all right, this contract is fired, I'm going to do it myself. And it takes away a lot of time from the other aspects of the business that you really should be working on. So we didn't. One of our project managers is my dad. He's worked in construction in the past. He's built custom homes before, so that helped. He came in shortly after we started. He had retired, and now he works a lot longer hours with us than before he retired.
Nice.
But yeah, it's not essential. I mean, you want to know the main things to look for. You want to know common construction language, but you don't have to know how to lay tile to do this successfully, in my opinion.
Yeah, that was one of the things, like you said, I think you said it may have been an advantage by not having those skills. I remember my very first rehab. I couldn't wait to get the rehab started, and I brought an electrician in to give me a price, and I forget what the number was, and the electrician felt like he gave me a really good number, and he was a referral from my private lender, who's also a rehabber, and I ended up saying the same thing. There's no way I'm going to pay this guy X amount of dollars. I can go run these wires myself. So I proceed to spend the next couple months, and, you know, I did that on my first handful of rehabs. It took me 4, 5, 6 years into the business before I finally, at the prodding of one of my business advisors, relinquish the tools permanently. And, you know, now I might hang a picture, like fix a toilet or something in my own condo, but not jump into the rehab the same way he did. The guy's not doing it. This is just not going to happen. And then I jump in with the tools. So I no longer do that on any of my renovation projects myself, but I can see how that was a benefit for you guys in the beginning. So, Kirby, I imagine you mentioned here $750,000 on up. You're hiring an architect. You're hiring a designer. This is not the usual kind of language that, you know, most of us fix and flip investors out here are talking about. Things, you know, to the high, almost seven figure. I'm guessing you guys have done $1 million projects on up. And did first part of the question is, did you start that way? And if not starting that way, what caused you guys to make that transition, or how did that transition take place?
Yeah, that's another great question, and we did not start that way. Our first deals were really middle class, middle income areas. You know, they and even down to one of the first deals we did, we bought for $14,000, put about 25 in, had it under contract at 85, but it didn't appraise out, so we ended up selling it at 75. But you know, we've done deals like that, and in that neighborhood, our contractor ended up getting carjacked at gunpoint. So it was a rough area on the south side of Chicago. But primarily now we work mostly on the north side of Chicago, and it was a conscious decision about 8 months ago. So what we had been doing this for about 2 years, about 2 years or so, 2.5 years, and we sat down and we looked at our numbers, and we said, okay, based on our overhead, the size team that we want to have, all these different factors, the amount of income we're bringing in from these deals, what do we really need to be doing to get to the place where we want to get to financially? And it became clear that we either need to increase the volume quite a bit of the size, of the deals that we're doing, increase the profit on those deals, so we need to buy them at a much lower price, which we were already, our target ROI is pretty aggressive, or we need to be doing larger deals where the profit number is bigger. We're still getting the same profit percentage, but the gross numbers at the end of the day are just bigger. And so we kind of shifted, and it shifted pretty quick. Once we decided that, all of a sudden a lot more of those higher end deals started coming our way, and we realized there's less competition at that level because a lot of people aren't willing to take on those bigger projects. And our niche became buying ranches in really high-end areas Like for Chicago, it's like Winnetka, Wilmette, Evanston, Glenview, Glencoe. We have properties in all those areas. And, those are the areas where the price per square foot is just the highest in Chicago of any area. And so you can find ranches there that were built back in the 60s, and they're surrounded by teardowns or they're surrounded by additions. And so the cost for our construction is the same, whether we're building on the south side of Chicago or we're building on the north side. And we realized that obviously we're putting in higher end materials, but the cost difference wasn't enormous compared to the price per square foot. So we realized if we can just add a lot of square footage, every foot that we're adding, we're getting a premium on. And so we bought a lot of ranches where we're doubling the square footage basically by building up or by adding an addition on the back. And it was a process. We thought it would be pretty easy to do that. And there's been challenges. Some of the bigger challenges are working with cities in these higher end areas and getting the plans through in a timeline that makes sense, because you really need to pay attention to your annualized return on investment. If you're getting into these bigger deals, it's not going to be like a 3-month quick makeover, close to close, 3 months. Typically, we're in them for a longer period of time. It can be 8 months, 9 months that you're in these projects. And it just depends on the city, getting it through the permitting process quickly. The attention to detail has to be much higher. If you've sold some flips, that the buyer always comes in and does their buyer's inspection, and typically they're pretty picky on a middle income home, but once you get into these million plus properties, picky, I don't know if picky is the right word for it. I mean, they will walk away from a deal because there's a scuff on the wall, so you need to you've got to have contractors that understand that and understand that it's not good enough. It's not good enough. It's got to be perfect when you get up in those areas. And then you're also going to have a smaller buyer pool that has the ability to buy in those areas. Right now, we're in a market that's perfect for it because it's definitely more of a seller's market, and a lot of people are moving out of the city of Chicago, and they want to move into where the best schools are. They want to move into these higher end areas, and so there's quite a few buyers. But you got to pay attention to the market and make sure that you're going to have a buyer pool that's able to buy these million plus properties.
That brings an interesting point to the table. I mean, let's talk a little bit about the risk of owning these as the seller's market maybe makes a transition, and how you might have accounted for that or planned for that now, if you have any. And also, in answering that question, you could give us an idea of whether the interest rates are a factor or whether the buyer pool is just paying with straight up cash when they're purchasing these $1 million plus properties.
Yeah, we've had some cash offers on these higher end homes, so I'm not sure what these people do that have that much cash sitting around, but must be nice. But yeah, the market definitely dictates it. And there's no way around it. It is higher risk for sure, because a 5% drop in the market when you have a selling price of $1.5 million is a substantial difference than if you're selling a house for, $200,000. So, and you're going to hold it longer too. So you're going to feel the effects of a market drop much more, just because, over an 8-month period of time, as opposed to a 3-month period of time, there's going to be more of a drop if you're on a downward trend. So we do pay attention to that. We feel like right now it's still a great market for it. There's no way to tell for sure when to get out. We don't feel like the pieces are in place that were in place for the crazy downturn that happened, 2006 to 2008, where all of those subprime mortgages were out there. There's not the subprime mortgage crisis that's going to be a catalyst for that big of a drop, but we have seen quite a bit of appreciation over since 2011 really was the bottom of the market, and it's continued to go up to now, 2015. So we realize it's going to level out, and you're right, interest rates have to go up at some point, and that's going to, I think, cause it to level out a lot more. So we are paying attention to that, and we still do the deals in the middle income areas. We love those deals because they're quick turn deals, and we can get in and get out and get them sold. So there's a place for both of them, and I think as we start to notice more signs that the market is kind of shifting, we'll probably shy away a little more from the higher end areas.
Makes sense. So I believe we've talked before and so many other things, but can you give me some ideas of how iCandy has done joint ventures, maybe with outsiders, not part of the, inner circle of 22? I imagine you guys have put together some joint ventures to do even more deals, right?
Yeah, absolutely. We kind of realized early on, too, with building the team that the more we can help other people get what they want, the more it comes back to you. And we started our Real Estate Investors Association here in Chicago. It meets once a month, and so people started coming out to that. And then we started doing some case studies at some of our properties, and people started coming out to that. And they, people were asking us, why are you? Because a lot of it was just free. We were just sharing what we do, and people were asking us, why are you sharing? You're creating basically competition for you within the market. And I can tell you that the more people we've helped, it's never caused problems for us. It's never caused us to miss out on deals. If anything, it's brought a lot more deals to us because everyone can't do everything. So if somebody specializes in wholesaling, and that's what they're good at, and we can help them become a better wholesaler and show them what we're looking for, then it's going to bring us more deals. And if somebody else is, got access to funds or they need to borrow funds, we can, loan them some money or, there's all different ways to work together. So we recognize that. And so over time, we formed kind of a joint venture education program. It's a joint venture mentorship program where it's kind of designed for people who are just getting into real estate. And it was kind of designed, too, out of the fact that we had been a part of so much education, and we saw that 90% of the people that were in the classes with us never went out and did anything with it. And it was frustrating to see that. And so we formed this program where basically we would teach people how to do what it is we're doing, and we would partner with them. We guarantee that we're going to partner with them on a deal, whether it's a deal that they find themselves based on how we teach them to find deals, or it's a deal that we line up, and we'll walk them through the whole process, be on site with them. We'll fund the deal for them, and then we'll split the profit on the back end. And so we've done that quite a few times. It's quite a few partners, and some of them are part of those 22 people now that work with us full time, and others did one deal with us, and then they went out and did it on their own. And it's kind of a mixed bag, but we've gotten a lot of positive feedback from it, and that's been a huge catalyst for our growth as well. So joint ventures are definitely something I highly recommend doing.
Nice. Let's talk about, you mentioned, and I found this to be the same way, the more people that I help, the more results that end up showing up in my own life. I mean, some of that has to do with just the mindset of success. I imagine that you're probably a student of success. Am I right, Kirby?
Yeah, I constantly am listening. I mean, I listen to your podcast and mentioned something about it, and that's how I ended up coming on your show. I mean, it's an awesome podcast. It's, I'm always looking for people who are providing that content, and I think that's one thing that you do. And, I'm always leveraging successful people around me. I'm studying what people are doing that is creating this success. And I mean, mindset, what I've come to realize is that mindset is the most important thing. I mean, it's incredible. There's people that we work with who are positive, and there's people we work with that are negative, and it's the exact same situation. It doesn't it's the sky will be blue, and there's somebody who can say, man, the sky's blue, but that means it's probably going to rain later today, and today's going to be a shitty day. So you can look at it that way, or you can say the sky is blue, what a great day it is today. And you're right, whichever way you decide, and so I've noticed I've listened to a lot of podcasts. I've read a lot of books on the subject, and we have business coaches as well. And what I've come to realize is that it's totally based on mindset, and it's overlooked so much. People are always looking for the next tool that is going to help them, or the how-to, rather than fixing their mind. And if people can just decide that whatever comes at me, I'm going to look at it in the most positive light, their life will change 100%. Just by doing that. You don't have to go out, and you will find, the tools. You'll find ways to create, financial success, family success, personal success, all of those things by changing your mindset and just choosing to look at things positively rather than negatively.
Yeah, and that really is such an important revelation that somebody has to come to. So in my own career, I actually had, a good amount of success from 2006 to probably 2008, 2009. Things were still cooking. And then by 10, I was stuck in a few flips, and it was like my own mindset had shifted. I think I was reading too much of Business Week and Fortune Magazine because all the articles were about, the chaos in the market and the mortgage-backed securities. And I kind of manifested that mindset of pessimism that was portrayed in the marketplace at large. And I remember certain deals looking back after I kind of had the revelation back to the positive mindset again. I look back and it was like a possibility mindset. So if I thought there was a possibility, if I had seen that there was a possibility of, say, getting a few of these deals closed, I would continue to work on those deals. But if I close out the possibility, and in my mind I say, there's no possible way that I could get this deal settled, that was the end of it. There was no more marketing the deal. I wasn't making any more phone calls on that deal. I wasn't continuing the process. I mean, I look back now with more knowledge, way more deals under my belt, and I look at like minute title problems that ended up shutting the deal down. It was like the title company said, we have this issue and there's no way around it. And now in my experience, I've found ways to get around that specific issue. But at the time, that was it. My possibility was crushed. There was no more tenacity. So it's like, in a sense, something that I even try to teach like my own family, my daughter and the people around me is to sometimes there's problems that we have to stick to it. And it's just persistence. It's continuing, does this work? No. Okay. Does this work? No. Yeah. Okay. Does this work? I mean, there's a certain point you have to reach where sometimes things, aren't working out. It's an unmakeable deal, but there are so many more where, giving it that extra time, that extra push is what kind of gets things over the hump, as it were. For newer people that are listening to this podcast, for people who are experienced, a lot of the experienced people probably already, they're shaking their head up and down. Yeah, I understand. I get it. This is what I do, plow right through the obstacles. I understand. But for the new people, keep sticking to it. One of the things that's bobbing around in my mind here, and I know we kind of touched on it a little bit, Kirby, do you guys have like an implemented system or like a marketing department? I mean, where do you come up with, I don't know, you must have millions of dollars in play to have 24 projects. I mean, I don't expect you to give up all the secrets, but can you give us some, couple little nuggets there that we can chew on?
Yeah, absolutely. Again, it doesn't happen overnight for sure. We started around my partner's kitchen table. I mean, that was our office in the beginning. We had never done a deal in the beginning of 2012. We had never done a flip deal. I'd done, some rental properties, and my partners had done a few other smaller deals, but we haven't really started the business. And so, it was transitioned over the years. And in the beginning, we were doing a lot of paid marketing. We invested pretty heavily into online marketing, which I don't recommend you start with. It's something that costs a lot in the beginning, and the payoff is over time. So if you're planning to do this long term, then it might be something you want to look at, but it's not the first place to start. We did a lot of yellow letters. We spent a lot of money in yellow letters and postcards. We figured out that postcards were not very effective for us. The yellow letters that look like they're handwritten, those were paying off a lot more. We did a lot of bandit signs. I'd be out there Friday nights till 3, 4 in the morning putting up bandit signs. And we got to a point where we were putting up about 200 a week throughout the Chicagoland area. So we had a lot of signs out there for a while. And so we were doing all of this together, and we were spending a lot of money. So we weren't making, none of us were driving around in Ferraris and, pocketing a ton of profit because, we were investing it back into the company and back into marketing and trying new things. And so that accumulates over time. And now our marketing budget is substantially smaller than it was day one or month one, what we spent in the first few months when we were getting started, because we know, number one, a lot more of what works and what doesn't work. Number two, we have a much better network of people who are bringing us deals now because we love paying wholesalers to bring us deals. So we've got people out there looking for deals for us. We've got all of the joint venture partners that we've done deals with who are consistently putting in offers on deals. And so half the deals that we're doing are joint venture deals, or probably a little over half at this point are joint venture deals. So a lot of other people are putting in offers, then we're kind of leveraging that. So, nowadays we really aren't spending a lot on marketing, but we're ranked on Google. If you put in sell my house quick in certain suburbs of Chicago, we're going to be on the first page that pops up. Usually, the first couple of ones that pop up, first couple of businesses or websites that pop up is going to be one of ours. So all of those things combined have led to us doing a lot more volume for a lot cheaper price. So we do have, and then when it comes to the financing aspect, going from the more middle income areas about 8 months ago to where we're at now with the higher end properties that we're doing, we increased the amount of capital that we need substantially. Several millions of dollars more are in play now. And so we use a lot of different lenders though. And again, those relationships were established over time. We started with family and friends on our first deal, and it was a 50-50 equity split. And we were happy with that because we were making 50% of the profit. And then it kind of transitioned into other private lenders. And then we started using some hard money, and then some more institutional lenders started noticing the volume that we were doing, and they started approaching us. We have one lender who's a gentleman from Canada who just called me up and said, hey, I did a search in Chicago because we were looking to invest in Chicago for real estate investors, and you're one of the first ones that came up. We'd like to lend you money. And it was a very reasonable rate, and he's a great guy to work with, and so he's one of our lenders. And then there's more like an angel type investor who invests in companies, and they also were interested in real estate, and so we set up a investment with them that we have kind of a rotation where they get a certain number of deals from us. So there's all these different types of investors out there, and you just accumulate them over time by just staying in the market, networking, trying to help out other people, and it's going to come back around to you.
Yeah, I guess one of the keys is actually doing deals in that market. So if you're performing and you're closing and you have the track record, that sounds like a pretty important piece of the puzzle there.
Yeah, absolutely. That's the one thing that I would say to people too is protect that track record, because that's, you walk in anywhere, and if you've done a few, not to say that you can't get money without ever having done a deal, but if you walk in and you say, these are the last 20 deals that I've done, here's the ROI that I can get on these deals. If it's a decent ROI and you kind of know how to do rehabs, typically investors are going to be very happy to work with you.
Nice. So do you guys buy properties on the MLS, Kirby?
Absolutely. Yeah, I'd say probably 40 to 50% of the properties that we do come from the MLS.
That's pretty strong, even in this market. Can you give us an idea as far as the price points that you're the most successful on the MLS?
Yeah, let me give you something that really helped us over the last 8 months as we transitioned the volume that we're doing. What we started looking at is, since we knew we could put additions on properties, we said, okay, what is the highest price per square foot area that we can find? And so we started looking at the North Shore of Chicago, where the price per square foot is really high. And then we decided what's the least likely property that people are looking for. And 2 bedrooms, are the, in our opinion, the difference in price between a 2-bedroom and 3-bedroom is pretty substantial compared to a 3-bedroom to a 4-bedroom. So we started searching for 2-bedroom brick homes in these high-end areas. And what a lot of other investors will do is say, okay, I'm going to run the comps based on sold 2-bedroom houses to get my ARV. And they're overlooking the fact that you can put this addition on. And so, and then a lot of others, like I mentioned, other investors just don't have the ability to do these additions or these higher end rehabs. So a lot of the competition is being washed away. And so we'll run the comps based on doubling the square footage, making it a 4-bedroom, 2.5 bath with a full basement, as opposed to a 2-bedroom rehabbed property. And the difference in value is tremendous in these higher end areas. And we know it's going to cost us, a couple $100,000 to put the addition on. And so that's how and we're buying them right off the MLS. I mean, and some of them we're buying close to asking price because we can add so much value. So we're forcing value as opposed to going out there and trying to negotiate every penny down, on a 3-bedroom, 2-bath, which everyone else is looking for.
Interesting. What would be, I'm just curious about this, but what would be the lowest ARV for you guys that would justify that construction-wise? I mean, what's the lowest price house that you've sold once it was done with an addition or a pop top?
Oh, with an addition?
Yes.
I think probably we sold one in Glen Ellen for $600,000. It's right around $600,000. So it's right around the ARV where it's kind of the cutoff where it starts to not make sense to us to add additions to it. If you drive through a neighborhood and you're the only one and you want to do an addition in that neighborhood and you're the only one that has an addition or there's no other teardowns going on in that area, you got to question whether the cost of construction is worth the ARV at the end, that you're really going to get your money back. So that's a western suburb. The ARVs there are around $600,000-$700,000, and we sold one for $600,000 that we did a master bedroom addition on the back of it.
Nice. Yeah. I've penciled quite a few deals, and I have found the same thing. If I'm going to $350,000, $400,000, if I'm going to put a second floor on, the cost of construction nets me the same profit as I would have if I just renovated the structure as is, and it ends up, not making sense to pop the top or do anything additional to it. Cool. So we talked about mindset a little bit. We talked about real estate. You sound as though you're well-read, as am I, and I found that books have been just such a tremendous source of knowledge for me in my life and my mindset. Do you have any recommendations for our listeners that you'd suggest, for real estate investors, mindset, et cetera?
Yeah, definitely. Unfortunately, I have stacks of books at my house that I never read because I pretty much never read. I am always listening to audio. When I work out, when I drive, all the time I have on either a podcast or audio book. And one I just am in the process of finishing, actually, that I really like is The Compound Effect by Darren Hardy. I think he's the chief editor for Success Magazine, actually. And he's studied so many successful people, and he's kind of compiled it into a book based around this idea that it's all of the little things that you do in life that add up to success. There's not this, typically it's not an overnight success. It's just consistent work and consistent improvements that start to compound over time. And he gives a ton of examples. It's really, it's an interesting book if you can listen to it like I did.
Nice. And then I was wondering, too, were there some mindset things that you learned at West Point and being in the military that you've noticed maybe you've excelled at as a result of that lifestyle compared to people around you, the civilian life? Is there anything you can share with us there?
Yeah, I think, it's kind of I think in some ways it's a double-edged sword because especially when you're at West Point, there's pretty much no time that's not scheduled. So you are, especially, your first year there is pretty brutal, but throughout your time there, it's just, you go from a mandatory, you've got duties in the morning to a mandatory breakfast to classes to a mandatory study time, then a sports time, then another study time, and then lights out at a certain time. So, it makes you really good at organizing your day and figuring out, okay, how am I going to fit this in and get the results that I want to get in a certain period of time. But at the same time, it makes it a little tougher to relax and get away from that lifestyle as well, or that way of thinking, and just kind of enjoy the ride. So I think that's one of the big things. They always say that the people who have gone to West Point, they say, it's not a good place to be, but it's a good place to be from because of all of the discipline and, the tools that you pick up while you're there. It's things that help you in life for sure. It's just life skills that will assist you in whatever it is that you're doing. But at the same time, you do need to enjoy the ride. So I don't, that's the thing that personally is a struggle for me, is that I get so focused on the end result that I forget about the ride sometimes. But you got to have a healthy mix of both.
Are you a 7-day-a-week kind of guy, always thinking about the business, always thinking about working? Is that sort of your lifestyle, or do you kind of like have specific cutoffs, turn the phone off, that kind of thing?
Yeah, I definitely tend to be. Since I've gotten engaged over the last year, I've been kind of forced to step back and add more family time in there, which has been good. It's been very positive. It's amazing. You can, a lot of guys who work 7 days a week, if they schedule in a day for family or for, personal time or whatever, you can still get the same amount of stuff done in 6 days if you're just more efficient about the way you schedule it out. So I tend to be, you can never turn it off. If you're a real estate investor and you're listening to this, you know that your phone rings all the time. And I know that the networking event that you ran, Dan, you talked about if somebody calls you, a seller calls you, you're going to be the first one in their living room. And it makes so much sense because, that's how you get the deals. But it's tough to turn it off then.
Congratulations on the engagement, Kirby. That's cool.
Thanks. I appreciate it. Yeah, I'm looking forward to it. Next month, actually.
Oh, yeah. Cool. Local, or are you guys going away?
Yeah, actually, we're doing a small ceremony in Michigan, and then we're going to do a big backyard reception here the following weekend. So
nice. Well, cool. We're kind of getting to the top of the hour here, so I have one more question. If you can answer it two ways, this can be lifestyle-oriented, it can be real estate investment-oriented, but I'd like you to kind of maybe answer it for somebody who's just getting started in the business, and then also the second way would be seasoned investor. Do you have any final jewels of wisdom to share with our listeners, Kirby?
Yeah. So, from a real estate perspective, if you're just getting started in real estate, I always preach this to everyone that I work with. Focus on acquisitions. Focus on getting deals. And I know this was mentioned in a previous episode that you did with another guest, but, a lot of people get held back by the money aspect, and the deal, in my opinion, is the most important. And you don't really have much without a deal. And I'll talk to people I'll talk to them at a networking event, and then I'll talk to them a year later, and they say they're still trying to build their power team, but they've never gotten a deal under contract. And so go out there and get a deal under contract, and it's amazing how much, you'll learn from that. It's not going to go perfectly, but you're going to learn so much and you're going to grow so much by focusing on just getting deals, because that's where the income's going to come from. And then from just a success standpoint, I kind of already mentioned it. If you can just shift your mind, just get your mind right to where, you can experience all the things that are coming at you from a positive point of view. If you can do that, you're going to shift your whole life. And you mentioned it earlier, you can get caught up with all of the negativity that you're getting inundated with on the news or from reading all these media outlets that it's all scare tactics. And I shut off the news. I don't watch the news, and I try to tune out all the negativity around me as much as possible and just surround myself with positive people. And it's amazing how much your life will improve. So those are the two jewels of wisdom that I have.
Nice. Appreciate it. Spot on. Go get a deal. I love it. I preach the same gospel. You got to get the deal first. You got to start with the deal. It's where all the pieces start to roll toward, getting a check. Well, cool. I think you prepared something special for our listeners, right? How people can get more information about you and the company, contact info?
Yeah, we recently just put together a quick PDF with the top 10 tools that we use in our business. We call it the top 10 tools for the rehab addict, because there's a lot of people asking us, how do you, where do you how do you find deals, or what's the tools you're using to communicate with the rest of your team and that sort of thing. So we put together a quick sheet on that, and if you want a copy of that, you can go to toptools.icandyhomeseducation.com. There's no www, just toptools.icandyhomeseducation.com, and it's spelled kind of like the iPhone. It's ICANDY, not the I like eyeball. So you can go to that site and you can grab a copy of that. And you can always contact me through email to kirby@icandyhomes.com.
Thank you, Kirby. So I will include the contact information, the URL, but I will not include the email address below the show notes here to cut down on spam through your email. So I will add those things. Well, Kirby, thank you for coming out. You've been a great guest. I got, 3-4 pages of notes here.
No, I really appreciate it. I appreciate you doing this podcast, too. It's offered a lot of value to me, and I know to a lot of other people.
Appreciate the feedback. It's good to know people are getting some value out of this. This is not a sales pitch. This is, 100% content. We do this to try to build value for everybody on, the buyers list, network, and people who subscribe to the podcast as well. Well, thank you also for listening to this episode of the REI Diamond Interview, your source for real estate investment jewels of wisdom. You can sign up to receive an email update of each new weekly interview at www.reidiamonds.com. As a bonus for signing up, I'll send you my free report on wholesaling titled Wholesale Houses 101, 9 Steps to Buy and Sell a House with No Money. That website again is www.reidiamonds.com. Until next time, this is Dan Breslin, signing off.
Thanks for listening to the REI Diamond Interview. To receive the REI Diamonds newsletter and interview monthly, sign up now at www.reidiamonds.com.